Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 20th of February 2022. If you have to be in fiat currency, which is the best currency to be in? Now that might sound like a straightforward question, but is it? The problem with fiat currency is that it reliably loses its purchasing power over time. So here we have a chart going all the way back to 1780, and we've got the purchasing power of gold and the US dollar over time. And we can see that over here, since around 1930, the purchasing power of the US dollar has absolutely tanked, whereas that of gold has risen. So yeah, we all know this. And we also know that historically, paper money eventually becomes worthless. Right now, every single country on the planet uses a fiat currency as legal tender. So which of those currencies is the best, though? Now, some have said that's a bit like asking which is the least dirty shirt in the laundry, or perhaps which of the Western leaders is the most moral, ethical, caring and selfless. The problem is this: the printer goes brrr. Every single fiat currency on the planet is expanding. And this is occurring at different rates, both over time and between different currencies. So, who is printing the fastest? Surely the best currency to be in would be, I guess, the one that's printed at the slowest rate. One way of looking at this is to chart the rate of change of the M2 money supply for each currency. So here we've got the percentage change from the preceding year. Now the problem is that I found it quite hard to kind of find complete and up-to-date data for a whole range of currencies. And so this is the best that I could come up with from the Federal Reserve website. But as you can see, most of the data stops over here around 2017, 2018. And we only really have US data over here up to 2022. Now, one thing I found interesting was the rate of printing of the US dollar, which is in this dark blue here, and the euro, which is in red. So you can see that around 2007 to 2009, you can see that both of these actually dropped quite sharply in terms of the rate of printing. Whereas at that time over here, China was already printing at a high rate, but it increased its rate of printing over that year, quite substantially actually. So I kind of wish we had data for what happened for all these other currencies in 2022. That would be really useful. So overall, we can say from this chart that these four currencies that we've included here are continually printing compared to the preceding year and at different rates, but the information is incomplete. We can't really say much about this really. I managed to dig up this chart which looks at this problem in another way. So the black line over here, so that's basically the purchasing power of the US dollar that's calculated from the CPI, and the other currencies shown here are calculated by basically using exchange rates. Now, and this is on a log scale as well, remember. So one of the assumptions that is made here is that the CPI is both reliably reported and is the same in the current countries of those other currencies. And of course, neither of those assumptions are true. Anyway, this is all we can work with. Anyway, according to this, we've got this currency here, which is the Swiss franc. and that seems to have lost the least purchasing power, particularly over these longer time spans here. And it's actually the Japanese yen, that's in green here, which has lost the most. Another way of looking at this problem is to compare one currency with a basket of other currencies. So one such example is the US dollar index. What this does is it compares the US dollar to a basket of 6 currencies with the following weightings. The euro has the highest weighting because the euro is the second leading reserve currency. There's no regular rebalancing of this index, and a rise in this index means that the US dollar is stronger than this currency basket. An important point to remember is that even if the dollar is strong, it's still losing purchasing power. And so it's really important not to mix those two things up. The SDR, or special drawing rights, is an artificial currency instrument that's used by the IMF, and it's backed by the full faith and credit of the member countries' governments. The SDR interest rate provides the basis for calculating the interest rate charged to member countries when they borrow from the IMF. The method for valuing SDRs is reviewed every 5 years. Another way of looking at fiat currencies is the World Currency Unit, which I've used a few times because it's available on TradingView. And this is a unit that was first proposed by someone called Lok Sang Ho of Linghan University, Hong Kong. And this was proposed as a way of denominating global bonds. It consists of 20 currencies of the 20 largest economies in the world. And so the basket is much broader than the DXY or the SDR. It also differs in that it counts for GDP and is inflation indexed. So after looking at these three kind of baskets, I thought, what if we looked at the charts of these three basket types if they're priced in gold? The first problem is that they all have different units, and so we can't compare them directly. So in order to do that, we'd have to use percentages for that kind of comparison. So that's what I've done here. But of course, that leads to the problem of which time point to use at 0. And that's a really important thing, which I'm going to demonstrate. So on this chart, I've used the 2012 high as the 0 point. And note that a low value basically means that the currency index itself is strong. According to this, the DXY, which is shown in black, is stronger than the world currency unit over the past decade. So if we use 2012 as that anchor point, then there's quite a substantial difference over here, isn't there? However, if we use the 2015 low as the 0 point, then we get a very different result here. So here, there's not much of a difference, maybe about 10% difference between these baskets. And so overall, I find analysing things this way not so helpful. It's just confusing, really. So overall, when we're talking about fiat currencies, I do find this topic very confusing and rather obfuscated. The problem is also that the available data is very limited and fragmented, leading to opacity. So which is the best currency to be in? Well, I can't be certain, but I'm leaning towards either the US dollar or the Swiss franc. But at the end of the day, all fiat currencies are moving in the same direction. What we're asking here is, who will come last in the race to the bottom? Next up, the market update. Let's start with gold priced in US dollars on the weekly scale. And this trend line over here held very, very nicely. And last week we were wondering if this little pop out the top of this line here was significant, and concluded that it probably was. And we had some nice follow through, didn't we? So prices moved up beyond this pattern. Now, of course, we are assuming that this is some kind of triangle here. We won't know, of course, until this price move continues. So with patterns, most of the time you don't know until you look back in retrospect there. Anyway, if this is the case, we're looking for a target around 2,100. Now, of course, it's not going to go straight up there. We're going to hit some resistance. So where's the resistance going to be hit? Well, I had a look at this chart here, and I thought, look, let's look at volume to try and decide that. Of course, you can look at price action. But you know, there's a lot of price action above here that could tangle us up. So this is on Oanda, and look at this volume here. That's huge, and that's again something very promising. But then I had a look at gold on other. Basically, they've got a whole bunch of different gold charts on TradingView, and so some of them don't actually provide volume, but some of them do. And of the ones that do, this was anomalous. A lot of the others were nothing like this. It was more closer to the average. So that's just one thing to watch out for if you are looking at volume. Now, I don't know one particular source where you can look and get a good representation of what the volume of gold traded is. I don't know where to get that from. Again, there's going to be, because I guess gold is traded in so many different places, you're not going to get one single source that's going to be reliable. Okay, so anyway, looking at this, the other thing you can do is look at volume by price. And so throughout this whole correction here, you can see that there's a lot of support about 1780 here. And if we go above, you can see here, we've got a little bit of thin air over here with light volume, but then the volume goes up. So I've tried to represent that by these lines. So we're looking at $1,923 and $1,960. And of course, above that, there's very little resistance there. So this is really the barrier that we need to get through. And so I think there's a fair chance we'll go up to about 1925, let's say, maybe even 30, and kind of get knocked back. And that's also because of this price action over here. And then, I mean, we might even get knocked back and come up again and get knocked back. Of course, depending on events, it could slice right through there. It really depends on a lot of things, but just remember that that's a potential sticking point area zone over there. Okay, silver. The silver US dollar chart is a bit messy. Last week I attempted to kind of draw a line like this. We're still on that line. We haven't closed above it, but it just feels like we're on the verge of something here. So I reckon we're looking at something like this. Of course, it will come. There's a good chance it will come and retest that before moving upwards. So just watch out for that kind of thing on the line. And some of you remember we were looking at silver priced in New Zealand dollars, which provides a much clearer picture because we get a descending triangle that starts back here. And again, that's at the moment right on the line, hasn't broken out and closed above that yet, but it's right on the edge there, and the timing is right as well. So interesting. I'm bullish on both gold and silver. The GDX, again, it's right on the edge here, hasn't closed above that line. But yeah, I think it will. I think it will. It's just a question of when. And there's a couple of things. One, it could just go like this and do that, or it could come above and come back and retest and move on. So I'm thinking one of those things here. And another thing we can look at is the GDX to gold ratio, which seems to have been forming this downward sloping channel. And this is the midline here, so we're just above that midline. So let's see, I mean, this could be a kind of double bottom over here. And so once we break out above here, I think it's a fair chance we're going to go up here. And so we've got two potential sticking points, one over here and of course this one up here. So that this chart basically tells us how the gold miners are performing relative to gold. So when this moves up, the miners are doing better than gold. And finally, I thought we'd look at the SILJ to silver ratio. Again, this is on the weekly scale, and you can see something's brewing over here as well. So I've got two lines here that I've drawn. One is to join these two highs here, but this is a better line over here because it joins these multiple highs here, and you can see that it actually just touched that before coming down. So at the moment, the silver miners have been underperforming silver, but I think once we get above this line, and particularly when we get above this line over here, that's really going to be fireworks at that point. And you know, this can do some pretty amazing things. Look at what it did back in 2016. Huge outperformance of silver over here. So the silver miners performed superbly relative to silver. So I'm thinking once we get above this point, there's a good chance that's going to happen again. So yeah, I'm feeling pretty positive about gold, silver and the miners at the moment. But of course, it's not going to be plain sailing. It's going to do a lot of zigging and zagging on the way up. But yeah, that's what I reckon. And now for something completely different. So these are crop circles, and just something that I've been fascinated with. And you might think, well, what's this got to do with finance? So crop circles are created, particularly in England, they've been found. They have occasionally been found in countries such as Canada and France, but predominantly they're in the Wiltshire area in England. And the fascinating thing about these are that some of them are actually related to the Fibonacci ratio. You can see these amazing geometric patterns that I'm completely fascinated by. And there's thousands of different designs that have been created here. And some of them have been created, well, within the space of half an hour. And nobody's ever been caught actually creating these. So yeah, the link with finance with this is Fibonacci, which just seems to be everywhere. So yeah, and any of you who are interested in geometry, maths and Fibonacci numbers, take a look into this. Now someone actually said, oh, these are just photoshopped, aren't they? Actually, no, because around 20 years ago, I actually saw one of these with my own eyes when I was sitting on a train. And I remember my initial reaction was, wow. And I was just so happy to have seen it. And I don't think anyone else on the train in my carriage certainly even noticed it as it went by. But yeah, one day I hope to be able to walk into one of these formations. It will be amazing. Anyway, just a little bit of something different there to end with. So that's it from me. All the best and see you next week. Bye.